And today we're going to go through cover the release of the new public review that we're doing for the Data Quality Committee. And if we just look at the David, if we go to the next slide, and we can have a look at the agenda for today's call. So on the call today, we have Mike Starr, who's going to give us an overview of the mission and the actions of the Data Quality Committee over the last 3 to 6 months since we had the last call around the public review. I'm going to Campbell Pride. I'm going to give an overview of the public review to show you some of the new rules and the guidance that's being proposed, and also give you a demonstration of how you can check your filings against the proposed rules, and then also how you can comment on the rules that have been put forward, and so that we can then take those comments into consideration. I just want to iterate that it's important as part of this process that we get your feedback. We want to make sure that it's as simple as possible for you to be able to run these rules, and at the same time, if there's any questions or concerns that you have a mechanism to get that back to us, and we'll walk through today how you do that. Mike is then going to go through the impact of the previous rules that were issued on issuers and what the impact has been on filings. And then Mike Starr is also going to go through some of the guidance that's coming up and looking ahead and what's going to be issued, and give you an idea of how some of the issues in XBRL filings we're planning to address. And at the end of this call, we're going to have a Q&A, which is going to be available for you to do through the chat window. And so you can put your questions in as we go along, and we'll address those at the end of the call. So with that, I'll hand it over to Mike Starr, who's going to go through the missions and the actions of the Data Quality Committee. Thanks, Mike.
Yeah, thank you, Campbell. Good afternoon, everyone. You know, when we started this initiative now some time ago, the purpose was to develop freely available guidance and validation rules to eliminate inconsistencies and errors in XBRL data that's filed with the SEC. And that was done in order to enable the automated analysis of the data. The purpose, when the SEC passed the requirement to file XBRL data, was to provide greater access to data to a wider audience, and to enable automated analysis of the data. And what we've seen since the implementation began is that there are certain issues that either preclude or inhibit the automated analysis, automated consumption and analysis of that data. And our mission is to enhance the automated consumption analysis of the data. Now, when you look at that, there are certain actions that are necessary to accomplish that. David, if you could move to the next slide. The first is, we felt, and I should add, this was initially a group of service providers that came together to with XBRL US to form this effort, because we saw that there wasn't uniformity of guidance in the marketplace. There wasn't uniformity in how data was tagged, and we collectively felt that the reason for that was there was a need for unambiguous guidance on how to tag financial data, and there was a need to make available validation rules to test for compliance with that guidance, and validation rules that prevent or detect tagging errors. So initially, when we started, XBRL US contributed its consistency suite, so its validation rules, to this effort, and Workiva contributed its validation rules. We go through a process within the committee to review those rules. So we have a working group that's made up of the service providers who are members of the Center for Data Quality. That's 6 or 7 service providers who come together on a weekly basis to review the rules that were contributed, and then they go to the committee, and then they go to development to code the rules. We then put the rules out for public exposure. So we put the guidance and the rules out for public exposure for a 60-day period. And then, of course, we incorporate the input that we received from the public exposure into the guidance and validation rules, and those are then presented to the committee for approval. So in addition, as part of our process, when we started this effort, we met with the chair of the SEC, Mary Jo White, to explain to her what we were doing and why we were doing it. As a result of that meeting, we have regularly scheduled meetings with SEC staff from the divisions of corporation finance, enforcement, and the Division of Economic Risk and Analysis. We have met with them twice since the committee was formed. We met with them in September 2015. We met with them this year in May, and we'll meet with them again in the September-October timeframe in the fall. So those activities are really the primary, it's an overview of the primary activities of the committee in order to accomplish our mission. And I think the next slide, David, go to the next one, please. I think, David, it's over to you to ask some CPE questions.
Okay, thanks, Mike. We're gonna break here for just a couple of CPE questions. A number of you have registered for CPE credit related to today's session. So if you'll take a moment to prepare yourself. Anyone is invited to respond, but for those of you that are qualifying for CPE, we'll need to get your responses to the 2 questions that are about to appear. So our first question this afternoon: how long is the public review period for DQC rules and guidance? Is it 60 days, 90 days, or 30 days? Again, for those of you that are qualifying for CPE related to today's session, please make sure that you respond to these 2 polling questions. The first one is in progress. It's on your screen. Simply choose one of the 3 options that's on the screen and click the submit button so we can tally your response. It'll be open for just another couple of seconds. How long is the public review period for DQC rules and guidance? All right, great. Thanks, everybody. Second question. How many public reviews has the Data Quality Committee held? Has the Data Quality Committee held 1, 2, or 3 public reviews? Take just a few more seconds to capture responses. For those of you that are qualifying for CPE related to today's session, how many public reviews has the Data Quality Committee held? 1, 2, or 3? Great. Again, thanks everybody for participating in polling questions. We'll take another break later on in today's session and answer a couple more questions for those of you that are qualifying for CPE. At this point, I'm going to turn it over to Campbell Pride.
Thanks, David. So the public review has started. It's been going since the start of this month, and obviously, as you got the question right on the previous CPE question, it's a 60-day public period. So you still have another 30 days to put comments in, and we'll talk about how you do that in a second. But I just want to spend some time and go through just the scope of the second set of rules that have been rolled out. So what we've been doing over the last 6 months is to develop another set of rules to expand on what's already been rolled out. And as Mike had said, it's using a lot of the rules that had been developed in the consistency suite and the Workiva rules. And so just walk through these. As you can see, there's 6 different types of rules here. There's a 7th, which is item here, which is guidance. And the first one you can see on your screen on the left-hand side, it's called DQC1. And this is called Axes with Inappropriate Members. So just to give you an idea of what these mean, we've got the DQC1, DQC13. These are different numbers just so that you can identify the rule type. And as we go through rolling out these rules, if there are additional rules that fall into that category, they'll have that prefix on it. So I just want to let you know what that number means. And so rule numbers are often referred to as DQC1 through four numerical numbers that are used. So the axes with inappropriate members, what this rule tries to address is where filers are taking members and they're using them on axes where they shouldn't be using them. So there are a number of axes that are heavily used in the US GAAP taxonomy, and we've identified over the years a number of ways in which those have been misused. And what these rules try to do is flag the preparer on when you should not be using a given member on a given axis. And we'll show you that on the website in a minute, all the different categories of that. Now, we did issue some guidance on tagging axes and members, just so you understand why we're saying each of those individual things, and I'll show you that on the website in a minute. So if you have any questions, there's quite a bit of documentation to explain why, specifically for this rule. The next item we have is Rule 13, and this is called negative values with dependence. Now, the last set of rules, we wrote a lot of rules where values couldn't be negative. This kind of builds on top of that, because there are certain circumstances where it's okay to have negative values. And what this rule does is basically said, if certain circumstances exist, you shouldn't have a negative value for a given item. So these rules are predominantly focused on the tax reconciliation. So we noticed a lot of people putting values negative when they should be positive, and vice versa. So what this rule does is it tries to address those, or it does address those. So it basically saying if you've got, the dependent values, if you look at the details of this, is going to basically look at net income before tax, and if it's positive, the value shouldn't, the resulting tax reconciliation item shouldn't be negative. If it's negative, then obviously then that's a different story. Then we've got DQC 14. This is another negative value rule check, and this differs from the other rules, and most of the negative rules that have been rolled out to date will flag an item as with a negative value no matter if it has dimensions on it or not. And there are some cases where particular line items can be negative, particularly where they may be in a table and they may be transferring out of one column into another. And this just identifies those elements where if it's got no dimensions on it, it can't be negative. But if it's got a dimension on it, it can be. So this just kind of tries to isolate those and try to limit the errors associated with that. The next rule, which is DQC 15, you can see -V2. In the first set of non-negative rules we rolled out, it was a first set. There are still a lot of items that were not included in that original set. So this is an update to the line items in the US GAAP taxonomy, which cannot have negative values. So we've added additional elements here. We still have another public review coming up It'll start sometime in September, and we plan to add additional negative values. So we're basically working through the entire taxonomy to identify all those line items where they can't be negative and the cases where they can be. The next item on the right-hand side is DQC 18, and this is deprecated elements used in the filing. We still have a number of cases where companies continue to use deprecated elements in the filing. A deprecated element is an element the FASB said, we've replaced this element, don't use it anymore, but filers continue to use them. So this, and we thought we should roll this rule out just because some tools don't identify deprecated items. So this will tell you if you've used a deprecated element in your filing. It will report either A, if you've got a value associated with an element which has been deprecated, or B, if you've just used an element that's defined in your filing. It may not have a value associated with it, but it will report that as well. So if you use a deprecated member but with no values associated with it, it would still report a problem back to you. And then the final rule here is axes with the default members that differs from the US GAAP taxonomy. And this is really just to help to enforce guidance that the FASB's issued. You shouldn't be changing the default members on axes in the US GAAP taxonomy, and so this rule just checks that actually hasn't occurred. So these are the 6 rules that have been added, and they basically can have quite a lot of impact. They're more categories than specific rules. So the axes within appropriate members, for example, finds a large number of problems in many filings, so it's really worthwhile running these. So let's talk about how you can comment on these rules, and then secondly how you can run the rules. So I'm just going to share my screen. With you. Okay, so it's coming up. So hopefully you should see my screen, and I'm just going to start on the XBRL US website. This is where the public, where you can put comments in for a public review, and we have a rolling credenza thing here. So this is get involved in the public review. This here banner here, but if you just want to go to the site, you can see there's something, a tab here called data quality. I'm clicking on this data quality tab, and then you see guidance rules as the third item. I'm just going to click on that, and this has basically got everything about the guidance and the rules. This will automatically drop to the approved guidance and validation rules, but in here there is a public exposure of guidance and validation rules. So if you go to this link, it'll just bring up the site, and then this mirrors what we've just been through on the previous slide. And then you can see here are each of the proposed rule types. And so if you click on this, for example, axes within appropriate members, and scroll down, let's just explain what the rules does, what the error message will look like. There's a section here for developers just to explain how it works if someone's going to implement this in software. And then you can see someone's put a comment in on this rule already. You have to be logged in with the XBRL US login. You can just create that. It's just so we don't get spam on it. So, but that's very easy to do. We're not going to send you emails or anything. So you can log in, and then you can post a comment on a particular rule if you think that it's incorrect or it doesn't take into account a certain circumstance. We also have this guidance on this particular rule. You click on this. This basically details the different axes and the different members and what the logic behind each of them is. It tells you, in some cases, what members you can and cannot use. And it deals with each of these axes. Now, I've had some comments from folks informally say, look, on some of these, we've said, you should create there's an extension member that may need to be required, and this is the element that you should define for it. This is how you should name the extension member. The reason we've done that is because the FASB is then going to come along and add add an actual member in their taxonomy to address the issue. That's why I was saying we're being quite prescriptive about what you should call the extension member. If you don't like the way the extension member is called, you can definitely put a comment in on that, and then we can go back to FASB and agree on what it should be. So this guidance is, for example, products and service axes. It's telling you, it's saying basically you can use any member on any of these axes. In addition, you can use these additional members as well. And it just goes through and details all of those. And if you have any comments on this, you can leave a comment here in the comment section. So I'm just going to go back. So this is where the rules are. This is how you put comments on them in each of these different sections. Now, if you wanted to, we also have issued code so that you can run these rules yourself. You can either run them on your own environment, or you can. We've also put a facility on our website, and there's some third parties who've also put facilities on their website so you can run these rules. So just to walk you through some of that. So this is more if you're a developer or a systems engineer. There's a link here. There's a developer resources, and you can see the kind of stuff you need. There's a reference implementation code here. This will go to what's called a GitHub site, and then give you all the details of the code. And if you look at this, there's a releases section. And just to explain this, release 2.0 is the public review release, so you can download this. You can then it's a plug into a RHEL. You can then run this code locally if you want to run it. And you're seeing green here is 1.1 release. This is the latest release. This is the approved rules. Now, just to give you an update on this, the last set of approved rules was in November, but subsequent to November, those rules went into effect at the start of this year. But in addition to that, there were some updates. There were some negative values that we got feedback on. People didn't think they should be firing. So there were a few updates that were made to the rules to basically eliminate false positives. So if you're a developer, this is where you can get them. There's two pieces of code you may be interested in. There's the approved rules, which is the 1.1 release, and there's the 2.0, which is the current public review release. Now, obviously, this is not final. As people give us comments, this code can obviously change, and we've seen some issues already with people coming back with comments, so that definitely will change. Okay, so in terms of the public comment, so there's a couple of things you can do. Obviously, if you're going to comment on these rules, you may want to run the rules yourself. So we've got a facility on our website here, and if you go to check your filing with committee rules, you can click on this link here, and then it'll ask you, okay, just the terms of use. You can read, but it's basically just a disclaimer. So data quality committee rules to use. You can use the approved rules, which is the 1.1 release, or the public exposure rules. So just to give you an idea how this works, so I'll choose the file. See everything on my desktop, and I'm just going to choose a filing here. Here's a zip filing. And then you can choose this file, and then you can check the filing. Then what this does is this goes off and it runs the rules. This usually takes probably about 10 to 15 seconds to run. I pre-ran it so you don't have to wait. And you can see here, this is what it looks like. So basically it has this DQC US, the rule number, and then a detailed number associated with it. Here it is here, it's actually finished. And you can see this is rule 5, is the only thing that's flagging in this case for this filing. This does not include the public release, the public release rules. If you want to run those, there's a radio button here. You can click public exposure rules, and then again we're going to go check filing, and this is going to run the rules that have previously been approved. Plus, it's also going to run the new rules that have been put up for public review. So I would, if you want to put a comment in, or you probably want to run these rules, you can see here DQC1 now comes up, and you can see there's a whole bunch of issues for this filing. And so if you run your own filing, you can have a look through and say, look, I think this is not right for the following reasons. We'd like to hear those comments. So then please put those comments, get those comments back to us. So this is how you run the rules. Just a couple of things to know about to when you wanted to run them. You need to log in to be able to run the rules. You can't run multiple filings all at the same time. You can only obviously run one at once. Now there are some folks. There are the Centre for Data Quality members. We have a separate site for Centre for Data Quality members. They can run those rules in the public rules where they've got more facility to be able to run multiple as well. So I just wanted to walk you through this. This is freely available for anyone to currently be able to use. The last thing is just in terms of the guidance is there's a number of test cases. So there are some folks who may want to develop code and incorporate it in their software. There are test cases here that are available. So what I would recommend is that if you're doing that, you want to run these test cases, make sure that you're getting the correct results. Now there's test cases for both the approved rules. These have been updated. These constantly get updated as we see issues and as we make updates to existing rules. And then there's the public exposure rules, which we just talked about. And the last thing before we go back to Mike and look at the updates, one of the things I'd like just to mention is a couple of the changes that were made to the approved rules. One, we removed, there were some negative items which had been put in, which were firing, which upon discussion with many parties, we and the Data Quality Committee, we agreed to relax the rule. So you'll see that there's some data quality non-neg rules, if you'd run them in the past, will be removed. And the other change was a lot of these rules were firing on S1 and S11 style reports. So now a lot of the non-negative items will not fire on. Sorry, there's some of the rules related to subsequent events will not fire on the S1 and the S11 reports, just purely because you've got to file 2 reports in one filing. So that's a summary of the rules and how to basically put comments on them, how to run them. And if you have any other questions, put them in the question box, and we can answer at the end of the session. So with that, I'll hand it back to David.
Campbell, thanks very much. I'm going to bring back the CPE question. While I'm setting up the first of these 2 polls for CPE, just to follow up on something Campbell mentioned. On that approved rules page, we've made some enhancements to try to identify where we've made updates to approved rules. So if you visit that page, you may notice a latest update date for those approved rules, and that indicates that there have been changes that the committee has approved in one of its meetings, and those changes don't go to public exposure. They're simply approved by the committee and become part of the rules. With that, I'll launch the third of our 4 polls today and ask you to please respond if you're qualifying for CPE today. The new set of rules covers which of the following error types? Does it cover negative values, deprecated items, and access issues? Does it cover negative values, positive values, and deprecated items? Or does it cover negative values, deprecated items, and DEI issues? Just a minute to respond to that. Another couple of seconds to answer a question about the new set of rules and which error types it's covering. All right. Thanks so much. And the last poll question for the day. Filers using the first set of DQC rules saw a decline in errors of what percent? Did they see a decline of 64%, 70%, or 60%? Filers using the first set of DQC rules saw a decline in errors of what percent? 64, 70, or 60%? And we're going to close this out in just a couple of seconds and then turn it over to Mike. All right, great. Thanks very much, everybody. Mike, I'm going to turn it over to you.
Okay, thank you, David. If you could go to the next slide, please. So the Data Quality Committee approved the first set of rules in November 2015, and those rules were effective for filings occurring on or after January 1, 2016. At the end of the first quarter of 2016, we did an analysis of the number of errors that were detected in the filings that occurred during that quarter that were detected by these rules, and compared that analysis to the number of errors that were detected by those same rules in filings for the first quarter of 2015. And what we found was that there was a 64% decrease in the number of errors in the 2016 filings. And it's real clear from the analysis. We did this analysis over a 2-year period. We did it quarter by quarter. And the number of errors found was flat in 2014. In 2015, there was a gradual, as you can see on this slide, there was a gradual decrease. It's important to note that in the second quarter of 2015, we made these rules available to the service providers so that they could start testing the rules before we made them available for public comment. And based on discussions with the service providers, it was really clear that as they reviewed the rules, they were also, in certain cases, particularly in those cases where they were doing the tagging, that they were correcting the errors that were identified by these rules. So you see this gradual decrease, and then when you get to the first quarter of 2016, when the rules become effective, when calendar year-end filers, of course, are filing their 10Ks, you see a dramatic drop in the number of errors. These rules were, as I think Campbell referred to earlier, that primarily covered inappropriate negative values. That covered, as you can see, there were 7 rules that covered other things, but the bulk of the rules covered inappropriate negative values, and that's where we saw, of course, the largest decrease. One of the things I didn't mention initially was that the reason we made these rules our first release, we talked to the Data Quality Committee, and on the Data Quality Committee we have 13 members, and the substantial majority of those members are represent entities that are data consumers. So we have representatives from Bloomberg, CapIQ, Credit Suisse, CalcBench, CFA Institute, a representative from the AICPA from one of the accounting firms. The accounting firms have become consumers of data because they're looking at how to use that data in their audit process, and they're also looking at it, how they can use that data in their advisory services, how they can advise their clients on using data, and analyzing data, etc. And then lastly, the last member who's a data consumer is the former chief economist and division director for the Division of Economic and Risk Analysis, Craig Lewis. So we asked them what our priorities should be in 2015, and number one on the list was get rid of the negative values that aren't appropriate. And that was why this was our focus. So, as Campbell said, we are now in the process. We've put out some additional rules. They deal with, as you saw, 4 or 5 or 6 issues, and there again is a number of negative rule. There is a rule that's designed to detect inappropriate negative values for a number of different elements that's in the current public release, and we will have more in the next public release, which will occur sometime, or which will begin sometime in September. So David, if you could go to the next slide. All right, let me add one other thing on this. I apologize, that I think is worthy of note. One of the things that we do when we meet with the SEC staff is that we review with them what our priorities are. We review with them what our actions have been to date, and we review with them the impact or the results of applying our validation rules to data that's been submitted to the SEC. So we go through the results. Or in May, we went through the results of the first quarter with them in some detail so that they understand what we're seeing, they understand the improvements that are occurring in data quality by applying our rules, and see where we still need continued improvement in this area. The other thing that we do is that once we finish this analysis, we went back to the service providers who are members of the XBRL US Center for Data Quality and asked them for their customers to look at those situations where the validation rules flagged a potential error that was not corrected, and to let us know why that potential error, in fact, was not an error, why the tagging was correct. And we did that because this is an iterative process. We know that just because of the vast amount of data that there will inevitably be situations that are really false positives. And we want to refine our rules because our goal is to only identify those things that are in fact actual errors, so that to the extent that they're false positives, we want that feedback so that we can continue to refine the rules that are now in open source, freely available to anyone who wants to use them. And in addition to that, we want to make sure that if it flagged a potential error, and in fact it wasn't a false positive, that there's some attention brought to that so that it is fixed. So now, David, if you could go to the next slide. This slide just shows you that the results, we analyzed it by large accelerated filers, smaller reporting companies. And as you can see on this slide, that there was a even greater decrease in the number of errors for the large accelerated filers, which at least for some of us was not a surprise that the greatest decrease occurred there. Can you go to the next slide, David? Again, this is looking at smaller reporting companies. The decrease there wasn't quite as large. There are probably some obvious reasons for that, and not unexpected. Next slide, please. So, where do we go from here? You know, Campbell talked about the rules that are in process. He talked about the rules that we are in process. They're out for public comment. The rules that are in process that will be put into public exposure in September. At the beginning of 2016, when we looked at our priorities for 2016, we really had two priorities. One was to continue to work on the rules that have been contributed to the Data Quality Committee, to take them through the committee's process, refine those rules, put them into public comment, get them approved, and put them into open source. You know, thanks to the efforts of Campbell and the working group that had been looking at those rules on a weekly basis, we've made substantial progress and are on target to meet our goal for that priority for 2016. The second priority that we had was we wanted to start to address the use of extensions. You know, it's clear when you talk to data consumers that extensions are either a barrier or a significant impediment to the automated consumption of data. When you look at the study that was done now 3 years ago or 4 years ago by Columbia University, that was a major issue then. I know FASB has done some surveys, and it's one of the top issues in the surveys that FASB has done. So we started looking at extension use. That was our second top priority. We wanted to see how we could provide guidance that would limit the use of extensions, provide guidance that would make those extensions understandable or comprehensible in an automated process so that machines would know how to categorize the item. As we went through that process, it became very clear at the outset, actually, that the issue wasn't just extension use, that the issue was element selection and extension use, that frequently extensions were used when there was an appropriate standard element that should have been used. We went through a process of an exhaustive process of looking at ES-file data, talking to data consumers. We had a number of our meetings during the course of 2016 focused on element selection extension use. We have prepared a draft discussion document that we haven't released yet, although we expect to in the coming weeks. We haven't yet released for public comment. We have discussed that document with the SEC. We've discussed the document with the FASB. We're in the process of getting comments from our committee members and incorporating those comments in the document, and then we intend to, in a very targeted way, start talking to both preparers and data consumers about some of the recommendations in that discussion document. The discussion document is a framework for element selection extension use and provides guidance for the application of that framework to the balance sheet and income statement. Our initial focus was on the balance sheet and income statement because we thought that that would be something that people would readily understand, and we wanted to really use that as proof of concept for the approach that we're taking. what you see in front of you on the slide are the guidelines under our framework. The first is element selection must be based on the required disclosure under U.S. GAAP and not how those required disclosures are described or communicated in the printed financial statements. We've seen a number of instances where someone would use an extension because they're really looking at how the disclosure was described, not the disclosure requirement itself, when there's a standard element for the disclosure requirement, but there's no standard element for the description. So the first guideline is base element selection on the required disclosure. The second was that materiality judgments that are applied in element selection should be the same as the materiality judgments that were used in preparing the printed financial statements. Now, you might say, why? But I can tell you in the experience of the service providers, there is a lot of time spent talking about how to tag disclosures in the printed financial statements. They're actually immaterial. And the time is spent because these immaterial items, which are frequently aggregations of individually immaterial items, there's no standard element for them. They can take a variety of different ways to describe them, but they're immaterial. So materiality is a factor in element selection, and that is why it's one of the guidelines. The third guideline was that extension use must be limited to defined specific cases. And in those cases, extensions must be connected to a standard element in the base taxonomy in a manner that enables useful machine-readable interpretation of the extension. So one of the things that the guidance looks at is what's an appropriate extension. So an appropriate connection, Appropriate connection could be a dimension. We're also looking at arc rows. So there's a general special arc row in the XBRL specification. So we're looking at that as a way to make the connection. We're also looking at the calculation arc row and does that provide an appropriate connection to meet the requirement. In our discussion document, we provide examples of how the guidance should be applied, and we will be providing examples that show both the use of the general special arc row, the dimension, and in some cases a calculation arc row. The last requirement was that the location of a disclosure in the printed financial statements is not relevant to element selection. And as a result, there should not be multiple ways to tag the same information. One of the common complaints or concerns from data consumers is that there are multiple ways to tag the same information, and in part that arises because there are actually multiple ways to tag information depending on whether it's on the primary financial statements or in the footnotes. So under our framework, we think that needs to be eliminated. I can tell you that in discussions with the FASB, they agree with that. So that's going forward. This will be a major emphasis of the Data Quality Committee. Now, I said that we had looked at the balance sheet and income statement in great detail. We're in the process of setting our priorities to expand the use of this framework and provide guidance for other areas. We're going to do that on topical areas, so whether it's the remaining primary financial statements or looking at the topical area of debt or financial instruments or property, plant, and equipment, but we're going to do it on topical areas because, again, we're not concerned about where the disclosure is expressed in the printed financial statements. We're just concerned about consistency of tagging. And that's what this is really all about. It's about providing a framework and guidelines for applying that framework that will lead to consistency of tagging. That consistency of tagging will improve data quality and also will provide, to the extent practicable, will provide comparability for data consumers. Something that you hear time and again from, particularly from investors, comparability is really important to them as they look at companies or look at sectors, and we think that this will do that. The last thing I'll add on this, well, our focus is on improving the usability. We think that if we develop guidance that actually drives greater usability, that it follows that that will also simplify the creation of the data. So while our focus is on the users, we think that there will be benefits to the preparers because we'll remove the ambiguity that currently exists in deciding how to tag certain disclosures by providing very good, tight, hopefully unambiguous guidance. The last thing I'll add is that I'll go back to the very first item under the framework, element selection. When we look at the topical areas going forward, one of the things we will look at is we'll make sure that there is a clear, unambiguous link from the disclosure requirements under US GAAP, so that's the disclosure requirements in the FASB codification and in Regulation SX, that there's a clear link between those disclosure requirements and the US GAAP taxonomy. So mapping those disclosure requirements to the US GAAP taxonomy will be, that's an important part of what we do when we start looking at and analyzing the tagging for those topical areas. So, David, I think that takes us to Q&A, if I recall correctly. If you go to the next slide. And we have about 6 minutes for Q&A, so we'll stop here and take questions.
Great, thanks, Mike. Campbell, are you online?
Yes, I am.
I don't have any questions in the queue. I'm just wondering if there were any other questions or any other areas that either you wanted to address or maybe Mike wanted to address.
The only thing I would say, just on the public review, obviously it ends at the end of this month, at the end of next month. So get your comments in. The sooner you get your comments in, the better. Then that gives us a chance to address them. Obviously, we want to try and turn around that public review as quickly as possible. But what we, just to give you an idea of what we do with that, is once we get those comments in, we go through them and we address them and respond to every single comment. So that, and that's a clear and transparent process. And so what we want to try and do is hopefully get those turned around. Last time, I think it took us about 6 weeks to get them turned around and then get the rules released. So obviously, if we can do it in that same time frame, we'll be looking to do that again as well. In the September rules, most of those rules will be updates to the existing rules, like the non-negative type stuff. So we would expect the turnaround on the second public review this year to probably be a little bit faster, because there's going to be less coding involved.
I guess the one addition that I would have to Campbell's comments about the end of public review is that Campbell spoke very specifically about the rules and guidance that are available to you. There's also a very general feedback page if you've got questions or issues with the process itself or just having trouble getting started. Don't hesitate to use that general post link. Or send an email to dqc@xbrl.us, and somebody will jump in and help you along.
One other question which hasn't been asked here, but has been asked in other forums, just so people know, is in terms of inline XBRL. So if you're filing in inline XBRL, will you be able to run these rules? And the answer to that is yes, you will. So don't hold off on filing an inline XBRL because you can't run the DQC rules. The DQC rules will also support being run, running both inline and non-inline filings.
Great. Campbell, thanks very much. Mike, thank you as well for your comments about the work of the Data Quality Committee. I want to thank everybody for participating in today's webinar. We'll send along, as I mentioned at the top of the hour, we'll send along a replay link for you so that you can go back to this or share it along with your team. And again, please make sure that you take advantage of the public exposure resources, including the ability to check your company's filing to see if it throws any issues relative to the public exposure rules that may open up a significant change in those rules. Thanks again, everybody. Take care.
Take care. Bye-bye.